Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, I want to talk to you about making tax digital for income tax. So as I'm recording this, it is a happy new tax year. Obviously an accounting joke that I do every single year, but it is I don't know, I think there's something cool about it being March. Right now, at the time recording this in England, obviously the sun's come out where I am down south. It's that new spring feel. So I always love that kind of transition into the new year. I always see that as, people do their New Year's resolutions. I always see April as that for myself and for the business. So that's a cool moment. So feeling quite pumped as I'm talking about this. However, this particular topic for many of you, if you're listening to this, you're probably aware of making tax digital. And I suspect maybe you're not as pumped about this particular topic as I might sound, and actually there is some very real challenges for a lot of you. So I want to talk through that today. So this is mainly going to impact sole traders and landlords, but if you're a limited company, you could still listen for interest, because I think some of the workflow things I'm going to talk about, if you're not already in the cloud accounting world and you're interested in, say, online banking and those kind of options, I think this show is still going to be packed with stuff for you. But mostly, yes, it's going to be sole traders. Now, the thing with this is that MTD, so Making Tax Digital, HMRC have done a big campaign trying to make people aware of it. Now, what I found from past is that despite that, and I do think they have done quite a good job at trying to get people to know about this. TV adverts, they've had a lot of engagement from actual HMRC members going to all the different trade shows and business things. They've been on TV and radio trying to tell people about the changes that are coming. But if you haven't heard about it, Making Tax Digital is effectively changing the way you'll do your tax return. But it's more than that, which I'll talk about, because ultimately it's not that complicated to do. It's a workflow problem. And if you're not already keeping digital records, I think this is where most people are going to come unstuck and there's a bit of confusion. So hopefully I'm going to talk you through this. Now, podcast format is never the best way to do a step-by-step guide. So I'm going to do my best to kind of talk you through a workflow that could work for you. And what I did is, at the time of recording this, so I'm recording this almost on the first day of the new tax year on the 6th of April, probably in about a week's time, there'll be a YouTube video on our main channel at Heelan Associates, where I've recorded an actual step-by-step guide of me doing this, what I'm talking to you about now. So if you're thinking, I kind of get it, but I want to see it in practice, that might be a good one for you. So bear that in mind. It is going to be coming out because, it's not necessarily that it's that complicated. It's that actually you're going to need to change your habits and what you do. So let's get into it. So let's recap then. So if you're in the Making Tax Digital rules, and I'll talk to you about when you're in the rules, because there's a rollout to this. They're staging it into different sort of segments of people that are going to be impacted. Once you're in the rules, you're going to go from one tax return a year. So at the moment, what happens is you do the whole year for the tax year, and then get sort of, all the way around to the 31st of January the following year. So right now, as we're recording this, the 25-26 tax year is just finished on the 5th of April 26. You're going to have to the 31st of January 2027 to file your online tax return. That's most people. There's a free tool in your personal tax account. You can go in, bring it up, fill in the boxes, submit it. Brilliant, right? If you like it. Some people still outsource that to accountants, but generally that's what's going to happen. That's changing for you if you're impacted, in that now what's going to happen is HMRC want you to, you must keep digital records. And I'm going to talk to you about what that looks like in a minute, because I think there's some misunderstanding about what digital records might look like. Then you've got to submit quarterly updates to HMRC via software. Now, those updates aren't a full tax return. It's worth saying that, because I think a lot of people, myself included, have used that you're doing 5 tax returns a year thing, but it's really to draw awareness to the fact that you now have to do reporting more than once a year. But you can do quarterly returns. Now, that quarterly return is almost a click of a button when it's set up properly. It all comes down to how well have you got the data together inside of your digital solution, which I'm going to talk you through in a minute. But you have to do quarterly updates. Those quarters are fixed, so they're based on the tax year, and everybody's got the same ones. And effectively what happens is you get to the end of the quarter. So say the first quarter is going to be roughly April, May, June. You get 30 days and then another 7 days to submit it. It works very similar to VAT. If you ever had to do VAT, if you're a sole trader who's VAT registered, this is going to feel actually quite natural to you. Where the biggest change is for those of you who don't keep any practical digital records at all. So maybe once a year you just keep a spreadsheet and you just pull your figures off your spreadsheet and put it in the boxes on the free tool. That's going to be where the main challenge is. And the biggest thing here is there is no free tool. So you've got to do the quarterly updates in some sort of tool that's not a HMRC tool. And then what happens is you do a 5th final declaration, which is basically the tax return, has the same deadline, and you do that at the end of the year, and it sort of updates all of the other figures, because you might have other income and things like that to do. And again, I think for a lot of people, you might still outsource that to an accountant, but if you're used to doing it yourself, then you want to pick a piece of software that does not only the quarterly updates, but the end of year. Because right now, this is the biggest challenge with picking a software solution, is they're all slightly different. Most of the, what I call the full accounting softwares, so Xero is obviously a fan favorite of mine and my clients. So I'd always recommend that. I'm going to talk about a bit of a workflow around that, but that's Xero with an X. They've got literally called Simple, a low-end version of the piece of software, and it does all the 4 quarterly returns, and it'll also then be able to produce your final one as well. So that's available. But of course, you have to pay for this. It's not free. Now, you can get a great discount on that by going to HeelanAssociates.co.uk/Xero. There's, I think at the time recording this video, it's like 95% off for 6 months or something. So you can pick it up for like under a couple of quid a month, but it's irrelevant, right? You're still going to have to pay for it where you had a free tool. So for a lot of people, that's a challenge and a very big frustration. So that's what's going to happen. Minimum 5 submissions a year, really. On top of that, if you've got sole trade and landlord income, you're going to have to submit for both. So that's another set of returns. Now, the key here is again, when you're picking your software solution, some software solutions are able to handle multiple submissions through the same software license, but most aren't. So it's worth checking. And even the ones that are, still a little bit tricky because it's almost a workaround to make it work. But something like Xero will handle multiples. So if you're, say, got a buy-to-let property and you're a freelance marketer, I'm just pulling it out of thin air, then Xero will handle that quite well. And it'll go through and you can do the reports from inside the same license. But yeah, many won't. So that's going to be part of the action points for you as we're going to discuss. So yeah, mandatory software, mandatory digital records. Now, digital records, it's worth saying that it isn't a picture of every single receipt. Now, that would be great best practice. And I'd love that for you if that was the case. If you're using something like Xero, obviously you've got QuickBooks and some of the other competitors, they all do the same. You can attach a copy of, photoed receipt to the transactions. It's all a brilliant audit log. Anyone can see it. If you're working with an accountant, it's a beautiful collaboration tool because all the receipts are there. However, that's not what's required. It's in law. I won't bore you with the detail, but effectively they're looking for the transaction detail. So it's like dates, category, how much, that kind of stuff. It's a short list of items. So don't stress about taking receipts for everything and having to have a paper receipt. It's always been best practice, but sometimes it's just physically not possible. So it's really about categorizing it in the software. If you've categorized it in the software, it's going to transmit that data to the revenue. You're going to be able to comply with what you need to comply with. So that's the main thing. So that's the kind of main thing that's changing. But it is, for me, it's these digital records. And also, if you're doing this yourself, it's remembering to set yourself a diary, kind of reoccurring diary alarm or something else, reminder in your calendar to make sure that you do it every quarter, because otherwise there's going to be penalties. Surprise, surprise, with anything with HMRC, it's always the way. Now, I think just while we're talking of penalties, my understanding is it's going to be a relatively light touch. And this has happened whenever HMRC have released a new digital program. They've always been pretty lax on issuing penalties to begin with. But I do see a lot of people in, say, our YouTube comments where they're like, I'm not doing this, I'm just going to rack up penalties. Well, those penalties are just going to get worse and harsher. So you've got to engage with the system. But that's where we are. Now, it's worth talking then. So just before we move on about who's actually affected right now and when you might be affected, recapping that. So you've got to get some software. I'm going to talk about how that might look in a minute. You've got to register for HMRC's MTD program, even though they know the data, as we're going to talk about, whether you're in or not, you've still got to do something there. And then you're going to have this workflow of keeping your digital records, submitting your quarterly returns, and submitting your final one. The key here is that it's only income and expenditures on those quarterly updates, and you don't need paper copy receipts. I think that's a couple of pieces of misinformation just to know about and clarity. So there you go. Now, who's it affecting then? Well, from April 26, as we're recording this, the main group of people are those that have already submitted a tax return last year. So if you were late, I say late, you had until the 31st of January 2026 to submit your last tax return. So if this is you always leave it late, you get it done towards the line. You might have only just submit this tax return. But if your sales income on your freelance, sole trader, whatever you want to call it, if it's a sole trader business, self-employed business, if it's over 50,000, you are in from April. And that's combined with any rental income that you have. Now, that's before expenses. No one cares about your expenses. No one cares about your profits. It's top line. It's sales, revenue, rental income, whatever you want to call it. Those two sources combined, if it's over 50,000, you're in. So ignore your job. I know this sounds like I'm labouring the point, but we get so many questions on this. Ignore anything else. Just literally, there's actually a couple of boxes on the tax return you're actually looking at to see. And you should have, in theory, received a letter by now from HMRC telling you they believe you're in, but that's not a guarantee. And obviously, you might have been late submitting your tax return or not done it yet. Bad, get that done. But if you haven't, then that's the case. You're going to submit it. So if you're over 50,000 there, you're in from the 6th of April. Now, bear that logic in mind. If you now submit your 25-26 tax return, which isn't due until 31st of January 27, like you normally would. So if you weren't in on the 50,000, when you go to submit it this next January 27, if it's 30,000, you're in from the April 27. And then even if you're not, say it's not 30,000, you're still not there. So you can just carry on as normal with your free piece of software and it's all gravy, it's all good. Then the next year, if it's 20,000, then you're caught. And from that April 28, you're then going to be in on the Making Tax Digital. So you can see it's going to drop and affect most people. It won't affect your small side hustles, but it will affect most things because 20,000, hopefully by the time we get in, your business is doing like even relative amount of income, 20,000 worth of sales is not that unlikely. So it's going to affect a lot of people, but that's where we are with the stage rollout at the minute. But the main thing is, do not worry about your job. Do not worry about anything else, just those main figures. What was your turnover? What was your rental income? Am I affected? And if you are, that's where it is. If you're a new business, you've got the same thing in that you've got to have submitted a tax return first for them to trigger the need to you to be in. That's the thing to always remember on this. So if you start now, you don't have to worry about it. But I've been saying for literally years that you should get ready for it. So you should be in digital records. You should be keeping them in some sort of software. So then when it comes, all you're doing is really just signing up for Making Tax Digital with the revenue, connecting the software and being able to submit. So get into that habit. There's a tons of reasons why you might want to be in cloud accounting software anyway. There's all these studies that show how much quicker it is to get paid if you've got the tech involved. And we see that at our end in real life scenarios with clients. If you're sending invoices and that invoice has got a pay now button and you can process the payment through Stripe or your bank's merchant or whoever, that's going to be a lot quicker for you to collect cash than it is waiting for them to go onto their bank and find their card to set you up as a payee, or go to the bank and draw cash out, God forbid, like those kind of things. It's going to be much quicker. So the studies show that your average small business, the last one that was done, is owed around £23,000 that's overdue at any one time, and that paying by digital gets that paid a lot quicker, or at least offering the payment digitally and sending digital invoices. So if you need no other reason, getting paid quicker sounds like a good idea from my mind. And what we see with small businesses, cash flow is obviously super important. So bear that in mind. Now then, when we got to go, I think there's a couple of things. Firstly, let's just talk about, do you have to do it? Yes, if you're in, you do have to do it. It's not optional. You can opt in though. And actually, when I did the tutorial video that's coming out soon, I actually did it. We had to show the registration process. So I digitally opted my mum. I was like, sorry, you're in early. You can do it. And we put her through to do it. And we're actually on the beta program with a few clients already that have voluntarily done it. So you can voluntarily do it. But if you're in, it's not optional. There are exemptions. So if for some reason you've got a religious belief that means you can't use technology, you're of an age that you just physically can't, and that's not me, that's not me judging you. There's plenty of people who are older than me that can use tech very well. This is the government's guidance on it. It basically says if you're of an age where you just deemed that you can't use it, it would be inappropriate or not able, you've got a disability, a religious belief, those kind of things, there are exemptions. To get them, you've got to write to HMRC or phone them, and there's a way to do that. I would say Google it, but in theory, I don't know, would you even be listening to this podcast if that's you? I don't know. It depends on how technologically enabled you are. The one I think might come off more often is those that don't have good internet. So that we forget that there are parts of the UK that just don't have the internet and just can't get a good signal. They might be digitally excluded from doing this. So again, that's worth having a look at. But yeah, it's not optional. Now then, so what to do? Step by step, let's go for it. We said about registering. So Google it. So I'm going to presume that you've got access to the internet in this case. You go and you Google Making Tax Digital. And even though they know, the HMRC know that you're meant to be in, you need to register, it actually takes like 2 minutes, providing you've got a government gateway or some sort of login. If you haven't, it's a little bit more complex because you've got to prove who you are, and it'll take you to a mobile experience most often to photo your face or ID and all this kind of stuff. But it's relatively smooth. There's a couple of options that you get at the moment. One is to use your government gateway. One is to use what they call OneGov login. And there's another option that I can't remember. But the OneGov one is ideally what you'd want to do if you haven't already got one. But it might just turn around and say to you, no. I tried it a couple of times on different people and it said, no, you have to use a gateway. For those of you already self-employed with a gateway login, it's probably just easy to use your gateway login. So you do that. And honestly, you click a few boxes about your situation. You say, yes, I've got sole trade, or yes, I've got property income. It asks you a couple of dates, and boom, you're good to go basically. So that part's the easy part. The harder part is choosing your software if you haven't already. So as I said, not all software is the same. So for me, you've got a couple of options. You've got option A. You could even use a spreadsheet, and some people have built a spreadsheet bridging piece of software that will suck your data out of your spreadsheet and then send it to HMRC. But most of those only do the quarterly update. So it's fine, but you've still got to find software to the year end. So it seems a pointless scenario for me. All you're doing is pushing the can down the road. I'm sure someone will build one. There probably is one in existence. I haven't come across it yet. As you imagine, with our kind of media presence, we get approached a lot about people wanting to, do deals and affiliate deals and all these things to promote these solutions. But I'm not promoting these solutions where they're not full accounting software, because I don't believe it's a viable solution long term. I think all you're doing is pushing the can down the road. I would do option 2 and get some full accounting software. So for me, the go-to Xero, as I said, but you have got other ones out. There's loads of them. If I was going to go top 3, I would say Xero. Then you've got QuickBooks, Free Agent, and probably Sage in there somewhere. Sage has improved a lot with their cloud offering to the point where I would say there is a top 4 there. I think previously I would argue it wasn't, but I think they're there. But there's loads that are enabled. I don't think it's a difficult thing for people to actually build. It's just whether the software product's any good. The reason I tend to recommend Xero, apart from usability, which is a big one, is that it's just scalable. They've got so many different plans and options that as your business grows, you can upgrade. And I think the upgrade path's pretty good. There's not many times where you're like, I really want this feature, but I have to have the uber expensive one. There is one instance where that's the case, and I've fed this back to Xero directly, and that is where you have multiple times, and that's where you have multi-currency. So if you hold a bank account in dollars or you need to invoice in euros, something like that, you actually have to pay for I think it's the ultimate edition, the bigger one. And in something like QuickBooks, that feature is actually bundled into their Essentials, which is one of their more entry-level packages. So if you have that, you might have to weigh it up. I still think that it handles it well. It's just that you have to annoyingly pay for the upgrade. But generally, if you're a non-registered, VAT-registered sole trader, they call it a simple program. That's quite good. And then as you grow, you can just add stuff. So if you need to it's got a cap of electronic invoices. Now, that's when you send, type up a full invoice and email it to somebody. You can only do 10 on the simple. That said, at the time recorded, for a lot of you, let's say you're a hairdresser and you don't send invoices, you only just need to record money coming in. There's no cap on that. You can just do that as part of your bank reconciliation that I'm going to talk about in a minute. So, and when I say reconciliation, it's a posh word for the data comes in and you tell the computer what it is, and it, just goes to zero or goes to the bank balance. Now, all that considered, for me, Xero is good. And give you an example of that, I've got clients on it at their smallest level with the simple plan. I've also got a £16 million turnover business on it, and it just runs it completely fine. As a business, we're on Xero. It just is good if you want to grow. So anyway, it's not a sales pitch as such, but you're listening because you want, an information and a solution. And to me, that's the solution that I would be tempted to use. So, not necessarily tempted, I would use. Now, so that's the main one there. What I would say is you'll see a lot of banks are toting their solution. So they're like, it's really, really easy. You can do it in app. Again, they're all right, but most of them are only building for income and expenditure that's coming out of that bank. And then can it do the year-end one or not? I'm not seeing many at the time recording that can do that. And again, I just don't think it's a scalable solution. If you want to grow your business, then I would do something else. Now, there are some of you that are like, I don't care. I think especially when it gets to the 20k level, there might be some of you like, I don't care, I don't want to grow. It's just doing 25k a year and that's all it's ever going to do. And I just want the easiest thing. You might start to think about other solutions, but even then, I just don't think you will. Xero Simple at the time recording at full price is about £7 a month plus VAT. There's not many things that you can get for that kind of value that do all these features. So just weigh it up. So for me, find your software solution, make sure it can do the year end. And I would say, even if you use an accountant, I'd have a discussion with the accountant about what's possible. They might have a solution, like I know from our point of view, if someone wasn't in Xero and they used bridging software and sent it all up into every quarter to HMRC, we can suck down their data at the year end with a piece of software we have to continue to do the tax return. So you don't necessarily need the capability of using an accountant. So it's worth talking to them. But they might say, as I know I would quite often say, is, but here's all the other benefits of being in cloud software anyway. So just bear that in mind. But yeah, so that's kind of your options there. Then what you're going to do is I would set up a separate bank account. Now, I know I've talked about this probably multiple times over the years. From our point of view as sort of tax people and accounts people, I don't care if it's a business account or not. The only reason I care about it is because some feeds, the reason you have a separate bank account is because it makes your life easier when it comes to bookkeeping. If you imagine, what we're going to do is we're going to connect our bank to send its statement data into our software, because it's going to save loads of time in keying every single transaction. It's just going to come in a list, and all we're going to do is tell the system what those things are. So, oh yeah, this was travel, this was subsistence, this was my accountant's fee, that kind of stuff. If you connect your personal bank account, think of all the things you've got to go through that are nothing to do with your business. Your Netflix, your McDonald's, some interesting stuff we see, as you can imagine, in all these personal accounts. We don't want that. So get a separate business account or a separate account. The banks will say it's against their terms and conditions to trade a business out of a non-business account. So really, you should have a business account. And there are quite a few free online ones, or at least free to a degree online, that will do this. But the reason the business can be important is sometimes there's not a bank feed for the non-business accounts. You can still manually do it. So you can export an Excel file, .csv as it's known, from the bank and upload it into software. But you're taking automation away, which seems a shame. So whatever bank you check, it's worth thinking about. So example being, a lot of clients use Revolut as a bank because actually their business plans have got quite a lot of features, but they do have what they call a pro plan, which is for sole traders, but that's not classed as a business plan. So you can't get a feed from your Revolut bank account into a Xero license or a QuickBooks or anyone else for that matter. You have to have a business plan, and that's only available to limited companies. Slightly frustrating. Something like Starling is an online bank. I did that as a tester in the walkthrough, and again, I've got no affiliation to Starling, but it worked well for me as I was able to go on there, do what I needed to do, and then hook that straight up to Xero. And I think in the end, that's what I used for the tutorial video that's going to be coming out on this. So, but whatever happens, get yourself a bank. Online's easy, but you could use bricks and mortar. You could use Barclays is generally a good bank from a business perspective. You could go and open a Barclays account. That will definitely hook up. And then go from there. When it comes to free ones, it's worth saying a lot of them say they're free, but they're not when you get to a certain cap. Like some have got really tiny limits, like, oh yeah, you can do 10 transfers, and then I'll start charging you 20p. And it's like, well, how many transfers does it take before I might as well just pay the monthly fee on a normal business account? They're not normally a lot of money. So anyway, regardless, get yourself a separate bank account. Make sure that it has a bank feed, that's the terminology, that will come into your software. And then you then need to automate that. So you're going to connect the two up. So what you do is you'll get your software, you'll connect your new bank, and that's quite a straightforward process. In theory, it takes you through, gets you to log into you do this through Xero. You add a bank account button, or any of the other softwares. It's basically the same process. You add a bank account, then it says connect your bank. You find your bank, put your details in, gets you to log into your bank. Then that takes you through, and you kind of go, yes, I would like to authorize X accounting software product to have my transaction data. And it pulls it out. So it's not, most of them won't, it's not able to pay from your bank. Some of them do have that feature, but there's a lot of safety controls in there. The majority of them, they're just literally scraping the bank data out of it. It's not like a completely live connection. Even when you're able to pay from your bank, there's normally like a login process that needs to happen for it to authorize that. So it's a safe thing to do. So you're going to do that, and you bring all your transactions in, and that's that sorted, and it comes in then, and all you're going to do in theory is then go in and categorize it. So on Xero, what happens is all the transactions come in on the left, on the right you go down and, as we said, tell it what it all is. Now the other thing you'll have to do in the step by step is, for the first time, you've got to go into your software and connect it to HMRC. Now it will know, what it'll do is it'll say, right, log in. So you go into the software, say, yeah, I want to connect my Making Tax Digital. It will then say log in. So you log in, you normally put your national insurance number in, and it sucks down again this concept of pulling it down from the cloud, pulls down, is this the kind of business you want to connect? So it'll be like a sole trade, or it'll be a UK property business, and you say yes, click, and it connects, and then you're going to have the ability to transmit your quarterly updates. So the main thing is going to be to update this software regularly. Now I was speaking to my trainer at the gym. He does it fairly regularly. He just scrolls and because you can do it on an app. I think it's better, honestly, doing it on a screen, but some of them, like QuickBooks, has got quite a good app. You could do some of your bank clearing on an app, but ultimately just do it on your laptop or whatever. And you go through and you categorize it. So you do that regularly. And then when you get to the quarterly submissions, you should just be able to go a couple of buttons, and it is a click of a button if the data is good. And the thing to remember about the quarterly updates is they're year to date. So if you made a mistake or you've just got incomplete data, doesn't matter, just send it, because currently there's no penalties for inaccuracy, as I understand it. There is definitely penalties for just not doing it though. So you're better off sending it knowing there might be a couple of things you've got to clear up in the next one. And what it does in the next one is update the entire year-to-date figure. So you've always got this running total, so you can adjust all the time. And it's only the year-end one where you're going to do your final adjustments and make sure that's right. Now, some of the softwares can, at that point, pull down a tax calculation and estimate your tax bill. Now, for me, doing what I do all day, I would take that with a whacking great big massive pinch of salt because it doesn't know about certain things, and that bill is likely to be almost nothing, loads, because of the way the allowances work and things like that. So, but it's more than you had already, and I think that's being touted as one of the benefits of making tax digital, because you might rightly be thinking, well, why are they doing this? Well, their point of view is they think that by forcing small businesses to keep better records and transmit regularly, we're going to have less errors or fraud potentially. I'm not sure on the fraud point, but the point is they feel like getting people up to date and digitalized in their affairs is going to make a better bit of a workflow. We shall see if that works or not, but I would agree that I think a lot of money is lost in the small business end of the market. So that, but one of the benefits they're saying is, but you're going to be on top of your tax affairs because we're going to show you a tax calc. So again, if you've got the right software, you will get some sort of tax calculation and estimate that comes down as well. So that's it. But the takeaway from here is if you are submitting your quarterlies, I would rather you submit a quarterly that's slightly incomplete than nothing at all. I think that's going to be better. Then you're going to get to your year-end submission, which again is going to replace your tax return. Now in this year, if you're affected from April 26, this is going to feel really weird because you're going to be submitting your quarterly updates, but you might not have finished your 25-26 tax return because that's not due until the 31st of January 27. So you're going to be submitting your quarterlies for the current year, but your old one you can probably do in your old tool and do it the other way. So, but from next year, that's going to feel like that anyway. Because your final submission is not due until the January every year, you're probably submitting next month, the next year's quarterly returns, maybe multiple of them before you finish the last year's final declaration. It's just going to be, it's hard to explain on a podcast, but if you drew it in a timeline, just picture that, when you've, like now in April 26, if you'd already been in MTD a year, you could now submit your final declaration, but maybe you haven't got all your paperwork. Maybe you're waiting for a P11D for a taxable benefit from your job because you have a company car or some medical insurance. You might not get that until nearly July. So you might have sent your first quarter's return update for this year without having done the final declaration for last year yet. So there are these crossovers that you're going to get, and particularly this year, because you're going to have to do your tax return the old way. You've got the old way one and your new quarterly updates. So that's something to bear in mind. But that end of year submission is going to be done. You're going to bring in all of your other adjustments, any other income, make sure that one's really right, and that one's going to actually generate the actual tax bill. Now, that could be handled by an accountant. So if you're already dealing with an accountant, they're likely to want to do that. Now, it's worth mentioning about accountants because they're all working in slightly different ways. What I would say for the industry, this is something that's worth talking about, is I don't think the industry is particularly keen on this because what's happening is all the quarters are the same. So there's probably like a 2-week period in reality where everybody is going to be rammed trying to submit these things, because as much as I'd love to say that every client, when their first quarter ends in the next couple of days after, are going to have all their bookkeeping up to date and sorted, if they're not outsourcing that, and then it's going to be submitted like before the 10th of the following month, is just unrealistic. As somebody that's ran, a big bookkeeping arm of our business for the last 20 odd years, the amount of time with VAT returns, people are still leaving it right to the end of the month and relying on these extra 7 days. You imagine all the people now that are going to be bundled into that bit. So accountancy, it's hard to staff it. So I think a lot of accountants would be very much like, if we can get you to do the quarterly update, that's better for everybody. But for a lot of people, they just don't want to do it. It's not worth their time. They want to outsource it, and they want to outsource it, and that's completely fine. So chat to your accountant, or if you haven't got one and you're thinking of getting one, speak to a few, just see what works for you. Because there's going to be everything from somebody literally transactionally bookkeeping and making sure that your bank's cleared down and everything, to just submitting the quarterly updates, to do we want a final year-end check. And I think that the biggest value for a lot of people is that final year-end check is going to be really important, because if you already outsource your tax return, that's what you sent it to them for anyway. So a little bit of a word on that, but that's what it's going to be. Now, I think I said to you about multiple income streams. It's worth just mentioning again, make sure your software can handle it so that you can get that all sorted. We've talked about the exemptions. So to me, that's the main steps that you need for Making Tax Digital. So let me just recap them for you. Register for Making Tax Digital with HMRC. Easy thing to do, providing that you've already got a gateway login. Then you need to choose your software. I'd argue that's one of the hardest bits. My default, but do your research and check it works for you. HeelanAssociates.co.uk/Xero for a Xero. Then you're going to open a separate bank account if you haven't already got one, and that bank account's going to get connected to your software. Then you're going to have your workflow sorted, and you're going to connect your Making Tax Digital to your software as well. Then you're going to go in regularly and categorize it. Then you're going to be able to transmit those returns. And if you're doing it yourself, you better do your end of year return if you've picked the right software, or you could outsource that to an accountant. So that's kind of your access to your that's kind of your step-by-step, I guess, and your access to the HMRC Making Tax Digital system. For me, the big wins here are going to be making sure that you've got good, regular bookkeeping habits. For me, it's a thing that if I was going back in time where I didn't have an internal team to do this now, I always did it first thing in the morning, getting them a cup of tea, close some transactions down from yesterday, who's paid us, what's happened, who have I got to pay, getting that feeling for numbers. In fact, there's a blog on our website where I talk about the ultimate morning routine. I think I did it during the time where morning routines were a popular discussion. So there's a whole blog on some of the key metrics that I would check. And it's not just me. This is information gleaned from loads of different clients that we've worked with over the years. I think at this stage we're over 3,000 different small businesses we've worked in the last 20 years, and they've all got different ways of doing it, and we were able to glean some of that. So if you're interested, there's a thing on there. Might have even done a podcast on that. I can't remember now. Too many of them. And just remember, this is a new workflow change for you. It is something you're going to have to do. It's not going anywhere. It's over a decade in the making. They've spent a lot of money, HMRC, on doing this, so it's going to happen. I didn't mention, but it's worth touching on, at the minute payments aren't changing. You're still paying it every year. So normally the 31st of January, and if you've done well, you'll have a payment in July as well. They're saying that's not changing. I've sat in a room with, I think it was the deputy director of HMRC. I can't remember what his role was now. And he said, look, we're not looking to change it. But since then, I've seen hints maybe in budget documents that maybe they will change it at a later date to accelerate cash flows with little bunny ears. So bear that in mind. But currently, it's not changing. But getting your setup and your workflow correct is going to be the most important thing. So that is it for Making Tax Digital. I'm sure there's something I've missed, because in a podcast format, it's a lot of information to give you in half an hour. But hopefully that's giving you some thoughts as to what you've got to do. I honestly don't think that the reporting is going to be the problem. I know, and I've probably stated that a few times, but I think it's going to be, if you're not in software, how do we get in the software? So get that sorted out early and get it done. I mean, in reality, we're now, if you are affected this particular year, if you think about it, your first quarterly report, you've got this quarter to sort it out before that first quarterly report. So you've got a bit of time, but not loads. If you're not in it yet, at least you know what you've got to do. So there we go. So if you have enjoyed this show, make sure to subscribe via your favourite app so you don't miss an episode. You can also currently we're chucking these up on a spare YouTube channel. So we have a HeelanHub YouTube channel where I will do this to camera as I'm rambling, and we'll just put it up. So if you prefer to watch that on YouTube rather than listen to it, it's also on there. So if you do subscribe via either the YouTube or via the app, I'd love it if you could share a review if you've enjoyed the show, things like that. It's always nice to see, and obviously helps our visibility. For more business insights and tax tips, be sure to connect with me and my great team across all the social media channels, particularly on our YouTube channel, our main one at Heelan Associates. But we are all over the other ones. I think because we've been so busy internally, actually over the last quarter, I've dialed down some of the other channels in terms of our activity of posting, although that will be returning, but we're always on it to communicate. So if you do have anything that you want to talk about, we are all over those channels daily, so we see them all the time. If you're interested in more tax tips and insight direct to your inbox, you can actually sign up to our HeelanHub Herald. Comes out roughly every 2 weeks, and you can do that by going to the website HeelanAssociates.co.uk. Scroll around, you get a pop-up, and you can input your email there. And again, that data is only us. We don't sell it on, we don't do anything with it. It's just to email you. So do that if you fancy that. And again, if you want to get in touch about the podcast, you can email us info@HeelanAssociates.co.uk. That's about it. I've mentioned the Xero link a couple of times. Full disclaimer there, we're obviously an affiliate, so we do get a kickback from when you sign up. So you win, we win, and it helps support the show. So, but it's worth mentioning that. So that's it. Have a profitable and tax efficient week, and I'll see you in the next one.